The next discussion is Fintech for financial inclusion, universal, accessible, and inclusive. And I think if there is one thing that has made revolution in access to finance is the role of an emergence of Fintech. So you had this interoperability of financial systems, making access to a kind of a universal to all regions in all sections through technology. Again with Jam Trinity, the Janadhan, Aadhaar and mobile. Then you have the emergence of the whole lot of digital stacks and digital public infrastructure. And what has happened in this space is today you have almost bridged that distance barriers in financial access. So you have moved away from that kind of a brick and mortar system to digitally enabled, inclusive financial system. But there are a number of issues there. There are access problems. India doesn't have even digital access across regions and across populations. There is need for digital literacy. So therefore, I think this is a critical element as we evolve. We need to see how FinTech integrates digitally across regions and places. So thank you very much. Over to you. Thank you.
So good afternoon everyone. As today we'll delve into a transformative topic that is really important for our India to become a Vikashit Bharat by 2047, which is how FinTech can shape the future of financial inclusion in India. We have over 6,000 FinTech companies in India, which is the world's third largest FinTech ecosystem that India has. We have game changers like UPI, which powers over 10 billion plus monthly transactions, digital wallets which have a user base exceeding 300 million, and neobanks which are redefining accessibility, banking accessibility, and they have revolutionized the financial landscape. These innovations have empowered millions, bringing about 80% of adults into a formal banking fold, as per the World Bank report. And yet there are some challenges that need to be addressed, which include bridging the rural-urban divide and tackling the 23% gender gap in account ownership and overcoming the barriers of digital as well as financial literacy. Our discussion here today will explore how cutting-edge solutions can help us resolve these issues, address this gap, and how FinTech can not only democratize access to financial services but at the same time drive sustainable, inclusive growth in one of the world's fastest growing growth. So starting with Srinil, blockchain has been widely used as a disruptive technology in finance, but it hasn't been used in financial inclusion part per se. So can you please explain or elaborate on how it can be used to enhance the financial inclusion, particularly for the underserved section of our society?
Yeah, thank you. Blockchain technology offers a very unique and innovative approach to financial inclusion, especially because it provides a direct access to the financially excluded. First of all, one of the major focus from the current government and worldwide has been on transparency and trust. If we are not able to depend on the financial systems that we are using, the accessibility will be that much more difficult. This technology, blockchain technology, offers that transparency and trust because of the immutability of the ledger system. Every token can be tracked, and with the current government even moving forward with e-rupee and its potential introduction in the near future, this technology can be harnessed to gain access to all those who have not been part of the financial systems. Next is the decentralized systems. Right now, identification has been very accessible to people. However, there are many who are unidentified and do not have access to finances because of those. This technology overcomes the challenge and can gain direct access. Another main issue that the financial system has faced is the transaction costs. Right now, even though UPI is fast and has very low transaction costs, the cumulative effect of multiple transactions is difficult, gets expensive with time. So blockchain technology addresses this and allows for transactions that can be facilitated by those who are at the lower rungs of the economy without an issue with the costs. Another issue is both cross-border, both across states and across country lines, transactions across those. There are many issues related to cross-state transactions, and these are very expensive, even with UPI. So that can be tackled. Next is smart contracts. Currently, the automatic disbursement of loans is not has not been achieved. Disbursement of loan has been very manual process with individuals figuring out and setting standards. However, this can be standardized and automatized using smart contracts that blockchain technology offers.
Yeah, so what you are told about smart contracts and cross-border remittances, that sounds transformative. But I think the problem that blockchain is currently facing is the scalability as well as the regulatory frameworks that are required for its scalability. So can you please shed a light more on that part of that?
Yes, the current trends in acceptance and inclusion of blockchain technology into the financial system has progressed significantly. The current US elections and many European countries, the current leaders have shown acceptance of the technology, and India has always been looking forward to the e-rupee system. And since the reach of UPI is very widespread, introducing the blockchain technology for the Indian government would be very easy in comparison to other countries. So India can be a leader in this domain, and with regulations coming in and the acceptance, the scalability will be very fast. Now, regarding inclusion, since blockchain technology can be included into the system and not be just an independent one, inculcating that into the current UPI system and the current transaction network, along with the Aadhaar identification, can make scalability very fast and very easy. For the government, it also requires technology, and Indian technology companies can offer great help in this regard. Also, the current system of networks of middlemen, that has been a big issue when when offering the services to the financially poor, has been an issue. With better regulations, the middleman can be removed and direct access to the financially excluded can be achieved. So in this way, the scalability can be achieved with upcoming regulations, which I believe is in favor of the blockchain.
Thank you, Srinil, for informing us about the blockchain technology. So, Saurabh, can you recently digital lending platforms have been providing credit, especially in the rural areas, to the underserved section of our societies. So can you provide or shed more light on how they can help us in financial inclusion of those people?
Correct. A lot of commercial banks were hesitant to go into this underserved category of section of a society. Reason being, there was a lot of cost involved in setting up these bank branches in the brick and mortar branches in those places. Another problem was that there is a lot of very long processing time and huge manpower required for processing these loans to MSMEs and small business owners. What Fintech has developed, when Fintech and innovation was there, they use AI models to you have to just upload your previous credits and transaction history, and you can get a pre-approved credit line just based on that. The key examples in these are lending card, which is a very simplified program where MSME owners can just upload their previous transaction list and get a loan from ranging from 5,000 to up till 2 crores. That's a huge amount for a MSME owner, which can push them in the right direction and save them from a very big financial crisis. Another is Money Tap. This is a personal credit line and mix of a credit card and a credit line. This product has been very crucial as it provides a pre-approved credit line to these small rural farmers and the people who did not have access to formal credit for a long time. This has been key in driving this innovation and financial inclusion in the underserved section of the society.
So I think MoneyTap, you said it provides more of a credit to the rural part. But as we know that sometimes ease of credit results in over indebtedness for that section, because they might not have that financial literacy that where to use that particular amount of loan that they are getting. So what do you think should be done to provide them that kind of education, as well as what kind of steps can be taken in that particular direction?
Correct. This easy access to credit can also be very dangerous, but we had discussions with Sir as well on this topic that the government should take the initiative, but government is already taking initiatives for a long time. It is about time that these companies have to realize that they have to put measures in line so that such mistakes do not occur. Another is that we as a society have to take up this challenge, that we have to educate the underserved section about the risks and benefits of credit. And this can be seen by a very beautiful example. There is a YouTube channel called The Labor Law, where he teaches about everything from what are the rights for the labor and how you can access credit and what is the benefit and return of getting the credit. And he also explained clearly about the risk. This is not a government initiative, but a people initiative. And such initiatives are very crucial for providing this digital literacy so that such incidents do not occur, where we start with the overcreditness. Thank you.
So finally, it means that providing credit is important. At the same time, providing education to that section of society is much more important with respect to that credit as well. And now, moving on to next topic, Priyank, RBI has recently talked about and have come down hard on P2P lending companies. Now, can you please shed light on what are the potential as well as the challenges that is being faced by these P2P lending companies? There are many fintech apps and companies that are coming for this.
Thank you, Shubham. So, P2P lending platforms like Pearson, Lending Club, and I2I funding, so they are transforming the India's financial ecosystem by directly connecting the borrowers with the lenders, cutting out the traditional intermediaries like banks, as we had earlier. So this intermediation lowers the borrowing costs. It makes the credit more affordable to the individuals and the borrowers, by providing the lenders with higher returns compared to the traditional investments. So as an example, we can take that during the pandemic, the platforms like Lending Club, they played a very critical role, because the traditional banks, they were very hesitant to give to do the lending part. So a report by Research and Markets project says that P2P lending market will grow at a CAGR of 25.3% by 2027, and it would be driven by the rising demand for alternative credit sources. But as you said, that there are significant challenges as well, particularly related to the default risk. So P2P platforms often lack the robust credit assessment frameworks, making it harder to evaluate actually the borrower's reliability. So, for instance, Faircent reported a default rate of 6% in 2021, which is more than the default rate in the traditional banking system. So, there is a need for stronger risk mitigation. Furthermore, the borrower education, transparency, and navigating the evolving regulations, they are all critical to ensure this success in the long term.
So, again, adding on to what you said, recently MobiKwik had an incident. They were going for an IPO, but their 12% club, or extra, what they called it, they have directly transformed the loans that were given by the investor into a borrowing statement, which will be provided to the people who have invested over a period of 2 years, without providing that kind of transparency to the person. For example, if I have invested, I was not provided that kind of clarity that my loan will be given and I will get that money back in 2 years. Previously, they provided the money same day itself. So here, trust is an important thing both for the investor as well as someone who is getting from that loan from that app. So what do you think can be done to build this trust as well as to mitigate the default risk that you have spoken of in P2P lending?
Whatever you said is actually very relevant, and I would say there could be a three-way approach to this problem to build the trust and mitigate the default risk. So technology, transparency, and education. These are the three pillars on which we can go ahead. So firstly, in terms of technology, we can use escrow accounts to secure the transactions, and which is as implemented by the different P2P platforms like Pearson. It ensures the safety for both the borrowers and the lenders. Additionally, leveraging the AI and the machine learning to analyze the alternative data like payment histories and social media activity, which we see in Lending Club already, it can reduce the default rates by up to 20%. So it may improve by improving the credit profiling, it can actually reduce the default rate. Then educating the lenders and diversifying the instruments is crucial. So I2I funding is another platform. It automates the diversification, spreading the risk across multiple borrowers. So transparency is again key. So platforms like they share the default rates and the recovery metrics openly, as Pearson does. So this can improve the transparency aspect as well. And finally, collaborating with the regulators like RBI. So this can ensure compliance while learning from the global practices like those adopted by Lending Club. It enhances the operational efficiency. So moving forward, if we move it in the form of three-way strategy to actually implement this in a more profound manner, we can make it much more trustworthy for the borrowers as well as the lenders.
Thank you, Priyank. That's really insightful. Moving on, Mohini, can we talk about digital wallets? How are they helping to provide financial inclusion to the society?
So right now, digital wallets, they have significantly transformed the fintech ecosystem, and as we are seeing that when it comes to the rural areas, let's say the UPI transaction, Paytm transaction, it has seen a significant increase. And if I would like to talk in two terms. First is, let's say the formal banking institution, it is able to reach the rural areas in a much better manner. Even the government incentives, let's say there is a scheme by our Prime Minister where incentives, they are directly transferred to the women's bank account. So if they have linked it to UPI or Paytm, they can. This will ensure a kind of security for them, that money won't be taken to them. Along with that, they won't have to visit the nearby ATM, which might be far away as well in the rural areas, and they can make those small transactions. Let's say just for simply buying the basic groceries, or basically making payment for their health needs and all. So this is something which is leading to financial inclusion, and this is also a part. These digital wallets, they are becoming a part of the JAM Trinity, the Jan Dhan account, Aadhaar card, as well as the mobile. Along with that, there is another aspect of the digital wallets where you don't need a bank account. So there are a number of people who find it difficult to open bank account or even operate it by visiting the nearby banks. So they can just simply have their 3,000 or 4,000 of monies online in a form of a wallet. This will ensure security, as well as a number of wallets, they are also providing a kind of a interest rate on that. Let's say Airtel Payments wallet is providing 7% interest on their savings. So this is something, eventually they can also utilize it to go for the P2P lending, and these wallets, they are presently providing a number of services. Let's say when it comes to bill payment, you can easily pay it online, or let's say they have taken some credit, they can pay it through those wallets. So yeah, when it comes to financial inclusion, digital wallets, they are seriously transforming India.
Yeah, so yes, of course, digital wallets are transforming, but there are some challenges that we can see. One of them being cyber security threats. I believe in 2021 we reported 16 lakh cyber security attacks in India. Secondly, with the digital divide that we have, because everyone does not have access to the mobile or does not know how don't have that digital literacy. So what do you think can be done to provide or help or remove these barriers?
So yes, because many a times these people they face a number of phishing attempts where people they would simply call, ask for the mobile details, and they got into the trap that some relevant person from the bank is calling and they share those details. So I think somewhere government need to take this responsibility. Let's say when it most of them they would be watching some vernacular shows on their TVs. So kind of a awareness campaign. In fact, presently RBI is also running such sort of campaigns. And also when it comes to the digital wallets as well, I think they also need to shoulder that responsibility. Let's say a number of because let's say when it comes to CSR, a part of the fund can be diverted to basically generating these kinds of awareness. Also, they can use Gram Sabha where everyone in the at the village level they come to attend that particular meeting. They can use that session to spread that awareness.
Thank you, Mohini. I think digital wallet can really help transform the rural area. And moving on, we have various crowdfunding platform as of now in India. We get various ads of Keto that we are able to see on YouTube. So, what do you think these crowdfunding platforms can help in financial inclusion in India?
So crowdfunding platforms like Keto and Milap and Impact Guru have basically transformed access to crowdfunding or other credit to people who previously did not have, so the underserved and the financially excluded people in tier 2 and rural areas of the country. So the problem before was that half of the time these people did not have access to financial services, and the other times they did not have the literacy also. But as my friends have already talked about, the Jam Trinity is also changing that. Now with the Jan-Dhan accounts, the Aadhaar identity and the mobile connectivity, people are accessing things like the UPI system, things like Fintech applications and systems, and finally crowdfunding platforms like Keto, Milap and Impact Guru. For example, the platform Milap during COVID-19 raised a lot of relief funds for PPE applications and oxygen ventilators for people living in rural areas who did not have any access to such emergency credit systems. And at the same time, all of these things are done in a very extremely streamlined situation where the need for a credit score or collateral is not present.
But there are some issues that are being faced by this crowdfunding platform, like one of them being they are not being transparent. Money is being siphoned off for some other purposes rather than for the purpose that it is intended for. So what can be done to improve or to ensure that this crowdfunding platform remains transparent as well as ethical?
So when all of these platforms begin, a lot of process and checks and balances were not in place. However, I can say as of a few months ago, and as of right now also, these platforms are working to make sure the transparency and the ethics related to their disbursements are maintained. For example, when Keto works on helping the people get money for emergency funds and for emergency healthcare, they make sure that the people running these campaigns provide regular progress reports so the donors can see where their money is going and the chain of transparency is maintained. At the same time, platforms like Milap also verify campaigns through extensive audits that depend on the amount of money that is supposed to be raised to the campaigns, and furthermore, a lot of these platforms are looking into the use of blockchain and other immutable ledgers to help sure that these transactions are recorded in time and place and cannot be muted further, and helping transparency and ethical use of the money.
So Nitish, insurance has been another sector where financial inclusion is required. So can you shed more light on that?
So InsurTech platforms like VGuys, Echo and Digit, they have been leveraging technology to provide more customized and affordable loans in tier 2 and tier 3 cities. And this is proving helpful in penetrating more towards that region and the underserved and unserved population. And right now in the personal non-life space, there is only 1% subscription to insurance in India, and that's very low compared to any other country. So InsurTech platforms are surely increasing the reach.
And what do you think can be done to improve the penetration? So the penetration is less than 1%.
So where traditional brick and mortar stores lack is they are not able to figure out effective last mile delivery solutions to tier 2 and tier 3 cities. And also operation cost for them is very high. Like if ICICI Lombard has to open up a store, has to distribute insurances in tier 2, tier 3 cities, they'll open up a branch, they'll hire people, and it increases their operational cost. And this is where InsurTech platforms, they leverage technology. They offer strategies like embedded sales, which is helping them penetrate in these areas.
Can you elaborate on what do you mean by embedded sales?
So these startups and InsurTech platforms, they are collaborating with MFIs, and they are leveraging their technology and integrating themselves with the POS systems that these people are using to distribute group loans to underserved and unserved population. So let's say in a rainy season, they are distributing 30,000 loan to a group. So the system will add 2 or 3 other products by itself, like let's say dengue insurance, because in such areas like Odisha and Bengal, this is a very big problem. So the system will itself recommend it to the group, and it will help the company also and the buyer side also to protect themselves in future.
Thank you, Nitish. I think we had a fruitful discussion on India's fintech revolution, where the rules of financial inclusion are being changed because of it. Now, fintech market is projected to reach 1 trillion by 2030, and this sector has the potential to uplift millions and provide them the inclusion that is being required. Now, we have our PM envisioning Vikashit Bharat by 2047, and for that, we need an equitable society to reach for that. And I think fintech has that kind of capabilities to ensure that such society can be reached, where everyone, of course, India as a nation, India will be developed, but we are much more equitable and not have that kind of barriers towards each other. And the next leap in financial inclusion will be rely on fostering collaboration between these fintech companies as well as the policy makers and community organizations to design a solution that is tailored for India, not taken from somewhere outside and just force marked into India. And thank you.
One last thing, that there is a need to transform in the education policy as well. I remember from the school the Pythagoras theorem, a plus b whole square is equal to a square, b square, 2ab, right? Mitochondria is the power of the cell. But there was no education on finances. There is no schemes told to me that how you can save money, how you can invest it, how you can grow. And if we can learn those things which are not that fruitful in life, we can learn these things as well. So there is a huge need to change the education system and start providing financial information to the students as well.
Thank you. I hope they bring that in action.
Thank you.